Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, massive week for the markets. We've got so much going on. We've got the ECB, we've got non-farm payrolls, we've got central banks all over the place. So also we've got the PMIs as well. So lots going on that's going to move these markets around. But the big focus is going to come with this ECB meeting. Now, the euro has been under massive pressure in recent weeks with the dollar strength coming through the markets. Dollar strength pretty much impacting across many major markets as well. But certainly the euro falling back towards that 104.65 level that had been the key support from March 2015. Certainly that is under pressure. And now what we've got this week on Thursday, we've got the ECB meeting, and it looks as though the ECB is going to be extending some sort of monetary easing. Now, exactly what that entails, the market's still debating. Will it mean a cut in the deposit rate? Certainly it looks as though that could be the case for the fact that the Schatz, the German 2-year yield, is falling and has fallen to minus 0.4%. The Schatz being a pretty good proxy for that deposit rate. So that might suggest that there's a 20 basis point cut in the deposit rate on the way. The consensus at the moment is forecasting as a cut to the deposit rate to 0.3%. So not as much as that Schatz rate, but it'll be interesting to see what happens there. There could also be further easing measures. We could see an extension to the quantitative easing program, an increase to the 60 billion euros per month purchases, maybe to 70 billion, and also potentially an extension of the program which ends at September 2016, possibly extending that to September 2017 perhaps. So lots going on, to lots of debate in terms of exactly what the ECB may do. So exactly what it does do in the end on Thursday could well mean that there'll be a lot of volatility because the market's not entirely sure exactly which way it's going to pan out. So I'd say watch out for that press conference at 1:30 on Thursday afternoon. It's a big volatility event, I believe. Now, other than that, we've got the payrolls report. Could this be the final payrolls report before the Fed increases interest rates? Now, we've got the prospect of a fairly solid payrolls report in the consensus views, about 200,000 on the jobs number, and also looking out for 5% on the unemployment data and about 2.2% for the year-on-year average earnings growth. So that would be constituted as a pretty solid payrolls report and probably rubber stamps the Fed rate hike in a couple of weeks' time. Not only that, we've also got OPEC meeting this week. Could it be that the Saudis finally yield and cut their production levels, and that would conceivably help to support the oil price? So lots going on of volatility events across the board. Now, how does this all play into Forex markets? Well, we've got the euro, which continues to fall away. I think that's going to remain the case until Thursday anyway. It seems to be moving back towards that key March low. That is seemingly on the cards. Now, the big risk, I suppose, if Draghi under-delivers on his easing measures, and then the market could see a big euro short squeeze and push higher. So watch out for that maybe. But in the meantime, we've also got cable, which is falling away. That is also at multi-month lows. And that is also putting downside pressure. The dollar strength continuing to hit on cable, and that is now looking like it's going to fall back towards the test of the 48.50 low, and possibly even back towards the key April low of 45.63. So what about dollar yen? Well, dollar yen actually is still finding support above 122.20 and looks to be breaking possibly higher. That the dollar bulls had a good day on Friday. Again, a good day today. So it looks as though if they can maintain this momentum, perhaps they'll even see an upside break. But still, quite a lot of near-term resistance to break through. But we'll see how it goes. But certainly, if the dollar bulls can maintain their strength throughout this week, lots of event risk though. But still, if the bulls can maintain their momentum, then you could well see an upside break above the 123.67 resistance. So in terms of indices, well, the DAX has been storming higher, and that has obviously been helped by this euro. The weakness of the euro means a strong DAX because of their big export exposure. Now, we're seeing that move come towards that 23.6% Fibonacci retracement level of 11,400. 138. Can it break through that? Because that would be deemed to be a consolidation area. And again, if Draghi under delivers, you could see a strengthening euro, and that would imply a bit of profit taking probably on the DAX. In terms of the S&P 500, well, we've had a bit of consolidation. We had Thanksgiving last week, so a bit of a pause for breath. Can the S&P 500 continue to push higher and pull on towards those key resistance levels? Now, throughout 2015, the resistance between 21.15 towards 21.35 has been massive. It's continued to find resistance and fall away from those levels. So can it finally break through? Well, at the moment, we're seeing a bit of consolidation and it's not looking likely yet, but we'll wait and see. Now, in terms of the FTSE 100, well, again, the commodity prices which continue to fall away, weakness in the metals prices, weakness in the oil price, not helping the FTSE 100. It continues to be a massive underperformer because of that, and it continues to find resistance around that 6,500 level. So that is the big level it needs to get through, but certainly at the moment it doesn't look like it's getting through there. Now, in terms of the commodity markets, well, as I said, gold is under pressure, as is the oil price. Now, gold is falling away. That's fallen to more than a 6-year low. February 2010 was the last time gold was back at the lows of it saw this morning, which is back below, sort of back around that 1,055 area. Now it's sort of just found a bit of support this morning, but I don't know whether that's going to hold or not, because certainly if the dollar remains strong, the gold price will fall away. 1043.75 was the February 2010 low. That's a big support. And then you're looking at the massive psychological 1,000 level. Will that be tested? So lots going on this week. We're going to see in terms of driving these markets, a lot of economic events to watch out for. Central banks on Tuesday, we've got the RBA giving its monetary policy update, not expected to cut rates, but still could well come out with a bit of a dovish statement there. We've also got all the PMIs to be driving risk appetite as well. The PMIs continue to improve, which they have been, to be honest. Certainly the Eurozone has been picking up. Maybe signs of a bit of a bottoming on the Chinese data as well. So we'll wait and see how that goes. But certainly we could drive that risk trade through that Chinese data. Then on Wednesday, we've got the BOC, the Bank of Canada. And on Thursday, the ECB gives its monetary policy update. That's the big event, I think, of the week. That, I think, trumps the Non-farm Payrolls report on Friday even. So lots going on this week to drive these markets. And I wish you good luck in your trading. And I will speak to you next time. Thank you very much.